Hello, friends. Welcome to the Tortoise Capital Energy Quick Take in 10. It's Masters Week, one of my favorite weeks, and a tradition unlike any other. Here at Tortoise Capital, we have our own tradition of keeping you updated on what's going on in the energy markets. I'm Craig Fisher, energy specialist, and I have Rob Thummel, senior portfolio manager, with me here today. We're going to go over what's going on in the energy markets and what matters most. Rob, last week we had Brian Kessens on talking about how this is one of the most volatile times in the energy that he's experienced in his investment career. That volatility continues this week. Tuesday, we had the ceasefire announcement. Wednesday, the Strait of Hormuz seemed to be open, and today it's closed again. With that amount of volatility, when things finally settle down, how long will it take the oil markets to normalize?
Well, Fisher, before we start, you're the best golfer here at Tortoise, and you're talking about the Masters. So let's get to really who's going to win the Masters. Do you think?
Oh boy, I've got a lot. Matt Fitzpatrick is one of my favorites, but always got to cheer for the local guys: Gary Woodland and Sam Stevens, a couple Kansas boys.
All right, Gary Woodland. I like that choice. Okay, so hey, I think I think they're like 42 hazard or something like that on Augusta National. I think water. If you played, you would never hit them. If I did, I would be in all of them. But when it comes to your question, there's a lot of hazards, I guess, right now in the ceasefire, and nobody knows, are we going to have a ceasefire or are we not? And the key right now is, obviously with the ceasefire and opening up the Strait of Hormuz, that will be what will really provide the relief to oil prices. Your question was, how long is that going to take? You know what, that's tough to predict. But I do think that if you look at the oil futures market, the futures market actually does a pretty good job of looking out and identifying uncertainties and potentially when those uncertainties could become certainties. And if you look a year from now, oil prices could be back in the 70s, right? And that would probably be a good thing for global economic growth, domestic growth, obviously lower gasoline prices as well.
Great. Energy has continued to be one of the leaders, if not the leading sector of the S&P 500 year to date, even with all the oil price volatility that we're seeing. Does that show the strength of the underlying infrastructure and midstream specifically?
Yeah, I think what it shows is if you look at, as you highlighted, energy's the leading sector in the S&P 500. Energy infrastructure is doing really well, holding in there with energy and then some. I think what it shows is, I think what we've learned in this whole process is that energy is pretty important, oil's pretty important, oil's still relevant, but infrastructure is really, really critical. And you don't have energy moving. When you don't have energy moving, it affects the supply. And when it affects the supply, then it affects the price. And so we're fortunate in the U.S. The U.S. operates the largest energy infrastructure network in the world. The U.S. is the largest oil and gas producer in the world. And effectively, the U.S. energy supply has been unaffected by this war. And so prices have stayed fairly low, relatively low. I can't imagine what prices would be if we wouldn't have U.S. shale production of both natural gas and oil.
So if you were an investor in this space, would you look at the strength of midstream and infrastructure as opposed to trying to time oil? More worried about owning the underlying infrastructure as opposed to the oil markets?
Yeah, I think investors in general that I've talked to are really underallocated to energy. And so the question is, well, what do you own? Do you own oil field services? Do you own oil and gas producers? Do you own infrastructure? And I think it's a good question. I think infrastructure is a good place to start, partially because with infrastructure, it's really essential. It's really critical. It offers you a really nice dividend yield, and it also offers some growth and some potential upside, right? And if you haven't looked at the energy infrastructure sector for a while, I'd really encourage people to look at the sector again, because the sector's balance sheets are much improved from just a few years ago. And so the companies are really well set up to not only just continue to pay really high, relatively high dividend distribution yields, but also grow those distributions. So when you get that kind of yield and growth concept that we've had in the midstream sector in my 30-year career here or my 20-year career here at Tortoise, that's usually a pretty good setup. And these stocks yet, even with that strong fundamental backdrop, are still not trading at all-time highs. They still have plenty of room to expand their multiples, which is an opportunity, I think, for investors as well to appreciate or to earn some capital appreciation as well as just that strong dividend yield.
Great. Now, Rob, your son's at Michigan. He's having a heck of a college career, national championship in football as a freshman. He's a junior now and probably still celebrating Michigan's dominating run through March Madness. Within the energy sector, are there subsectors or names that we see that are dominating the energy markets today?
Oh, that's a good question. Well, I think the more fun part was the picture of Jaxel Lindenborg that he sent me with the day after the national championship, actually, with the net still hanging on from his hat. So I think those guys are the guys are pretty happy in Michigan. So it's good days to be a Michigan sports fan. However, why did Michigan win? Well, they won because it's kind of a complete team effort, right? I mean, they dominated on offense, they dominated on defense, and that's kind of the way they were all year. Where is that in the energy sector? What's dominating in the energy sector? I still think it's energy infrastructure because it's more of a complete team, right? So what do I mean by that? Well, what I mean by that is when you invest as an investor, what do you want to earn? You want an opportunity to earn total return. Well, the energy infrastructure offers that. You want an opportunity to earn dividend yields. Well, the energy sector offers that. You want a companies that are generating free cash flow. Well, energy and energy infrastructure generate that. So I think what we'll see is the energy infrastructure sector is probably best positioned to be the Michigan of energy because of the complete team effort. And so anyway, before we wrap up, Fisher, though, look, I know everybody wants to know, where in the world can we find Craig Fisher next?
Well, we have started to increase our exposure at conferences. A couple of my colleagues were at Future Proof a couple weeks ago, and now we're going to the Investment Wealth Institute, IWI, in Fort Lauderdale here, April 19th through 21st. I'm a SEMA designee, so it'll be good for me to get some CE, as well as talk to other peers in the industry that have that same designation. And then just continuing on visiting other cities in the Midwest, talking to advisors.
All right. Well, Craig, thank you.
Yeah, Rob, thanks for joining us. And thanks for joining the Tortoise Capital Energy Quick Take in 10. If you have any questions, you can reach out via our website or some of our social media postings. And again, really appreciate you sticking with us today and talk soon.